through and see it at a later date. Okay. So I am recording the session this evening. All right. Well, first of all, we're going to review the quiz that you all posted yesterday. The grades won't be done until Tuesday or Wednesday of this week, but I want to go over the one section where you had to do the journal entries for that company. I believe it was question 3. So we're going to go over that. The solutions to the entire quiz have already been posted in Blackboard in the quiz number 1 file folder. So you can go to that file folder and download that work if you so desire and take a look at my answers for that quiz. And again, your grades will be posted probably Wednesday. If I can get them all done tomorrow, and I'll try, but no later than Wednesday, you'll see your grades of your quiz. So we'll look at that. Then we're going to talk about adjusting journal entries from Chapter 3. We're going to take a look at exercise 7, and then one of the problems, 125A. Again, those solutions are also posted in Blackboard. Exercise 7 and one of the problems, probably 3.2, will be your template for future work. The quiz, you have another quiz this coming week, due on Sunday, and that quiz will be from chapters 3 and 4. Then we'll take a look at chapter 4, talking about closing entries, closing the books, and taking a look at especially a problem 4-1, which is the complete accounting cycle for a company. And if you can do problem 4-1 on your own, then you're in pretty good shape heading into the end of week number 3. We will also talk about, and some of you have already scheduled, we will have a student interview with each one of you and me this Thursday evening during our office hours from 7 to 9 p.m. I posted a discussion forum yesterday, and what I do with every online class is I have a chance to meet with each one of you individually, usually around the 2nd or 3rd week. You schedule an appointment for me, you come on during the WebEx office hours, and we talk for about 5-10 minutes, asking you about any questions or concerns or any issues you may have with our class. And so that's something that we will do throughout the course of this year. I'll probably have another session with you towards the end of the term, but please create a forum, pick a time during that time period of 7 to 9, and you'll come on and we'll have a chance to do a one-on-one talk on Thursday. If you cannot do Thursday evening for whatever reason, let me know and we'll try to reschedule you for some time next weekend. Also, another topic on hand this week is your project paper, and I'll explain that to you. As part of this class, you'll be doing a paper looking at a company's financial statements from the Securities and Exchange Commissions. You'll pick the company, and then you'll be asked a series of questions to interpret from their 10K financial report. What is the 10K financial report? It is the accounting dream for accountants. The 10K is what all the financial information about a corporation. It's published every year at the end of their fiscal year, and it tells you everything you wanted to know about but were afraid to ask of any corporation's financials on record. And you are going to be asked to select a company and then bring up their 10K and answer a series of questions. Those questions are already posted in Blackboard. You have till Monday, May 25th to do this work. And you have a discussion forum to complete by this Sunday, April 19th. And by April 19th, you will tell me the type of company you have selected, and we'll talk more about that later. Yes, it's accounting class, and yes, you have to do a paper. All right. And then last thing, you have another quiz this week, as I mentioned earlier, on chapters 3 and 4. That quiz is already posted to Blackboard, and it is due Sunday at 9 p.m. To Blackboards, and this will be a required spreadsheet quiz. All your work will be in a spreadsheet, and we'll talk more about that later. So as you can see, a full plate of work to do in this next week. You're going to have to make sure you plan your week accordingly to get to it all. And if you have any questions or concerns, we can talk about it on Thursday during our interviews, during our Thursday office hours for this class. So that will do our introduction to tonight's class. I hope everybody is in good spirits, and if you need any help, please feel free to let me know. I know Tori is having a little bit of computer problems this evening, and Tori, you just deal with those what you can, and we'll just go from there. But I'm recording this meeting if you have to, if you do have computer problems and things aren't looking very good. Okay. First off on the agenda today, I would like to bring up the answers to quiz number 1, question number 3, and let me bring that up for us now. Because this is a good synopsis of chapters 1 and 2. It's a good review. It's a good making sure we got our journal entries and our trial balance work done before we get into the new endeavors of tonight. So let's bring that up. There it is. One of the things you should be aware of tonight, make sure I got this set up right. Hang on. Tonight is Monday night, and there's a lot of people using WebEx, so the system is a little bit slow, so we have to be patient. So let's make sure. There we go. I hope you all can see that. This is the answers to quiz number 1, the journal entry, the ledger, and the trial balance for the quiz that we did for Sunday. I just want to go over that briefly if you have a question on it. But again, we are asked to record journal entries for the transactions in the month of, and I lost my piece of paper, hang on. All right, Professor Hassey, get your act in gear, knucklehead, and figure this out here. Okay, we are asked to record transactions transactions in the month of March, owner investment, the purchase of office supplies, equipment, the earnings of fees, the paying of paying of an accounts payable of that equipment, and so on. We are asked to do a journal entry. Then we were asked to put together a general ledger of those transactions by account, and then we were asked to put together a trial balance, listing that account and showing those account balances appropriately. Trial balance, general ledger, and journal entry. And this was question 3 of your quiz. Notice, a journal entry is a recording of business transactions, a recording of an event in a debit and credit format. Debit is the left-hand side of an asset, liability, or equity account. Credit is the right-hand side of a debit or equity account. Debit increases assets. Debit decreases liabilities and equity, which in the form of expenses and owner withdrawals. Credit decreases assets, and credit increases liabilities and equity accounts, more specifically owner investment or capital and revenue. So K Spade decides to invest $100,750 in the business, depositing into a business account cash, and now has started the business K Spade Capital. Debit cash, credit K Spade Capital. We have increased the cash account, the asset account. We have increased the equity account, and we have thus created the first transaction. Notice on the ledger page, if I created a ledger for the cash account, notice there's the $100,750 in the debit side of the cash account, and in the equity side of the account, there's the credit of $175,000. I have now posted those to the general ledger. All right. Every transaction, every journal is posted to the ledger. The ledger keeps track by account of all the account balances, and then we take those account balances and put them, when we're all done with the transactions in the period of time, and we put those into a trial balance format that tells us that our ledger is in balance. All right. March 2nd, they purchase, or the company purchases office supplies for $1,250, and they spend cash. How do I know office supplies? Because Professor Hasse in the problem gave you the chart of accounts, gave you the accounts to use. Your work has to do with which account it goes into. Debit office supplies, we increase the asset, and at the same time, we credit the asset cash because we're paying for it with cash. We post that to the general ledger. Office supplies, there's the debit in the debit side of the account, and there's the credit hitting the credit or right-hand side of the account of cash. March 3rd, we purchase office equipment on account, on credit. We do purchase it. We actually take custody of it. We get an invoice, and the invoice says you got 30 days to pay this balance. Debit office equipment, $10,050. Credit accounts payable, $10,050. We increase the asset because we've received office equipment, that's an asset, and we've increased the liability called accounts payable. Accounts payable is an account that's usually used when you have to pay the amount within 30 days. And we now owe $10,050. We increase the liability account, $10,050. We take that and post that to the ledger. Office equipment, there it is there, $10,050. Accounts payable, there it is there, $10,050. We've now posted that to the ledger. Remember last week I told you that in the real world, this is done automatically by a computer system. You know, we have a variety of different types of computer systems in the world that just do accounting. And the accounting system does this automatically. You are the computer in this class. You're doing all the entries and the posting. March 4th, we provide services for our company for $15,500. We provide a consulting service and we obtain income, fees earned. How do we get paid that income? They give us cash. Debit cash, $15,500. Credit fees earned, $15,500. Cash goes up, equity goes up. Equity goes up as a credit to revenue, and the revenue account is fees earned. Post that to the ledger. There's the, there's the $15,500 posted to cash on the left-hand side, and here's the fees earned over there, posted to the general ledger account, $15,500. The only difference between this and our textbook is the textbook adds the account number to the account. Remember last week I told you not to worry about the account number. And it also adds the date of the transaction to posted. That's not necessary either. On March 5th, we now pay the balance owed on the March 3rd transaction. We're now paying that $10,050 that we purchased the office equipment on account. Debit accounts payable, $10,050. credit cash $10,050. We're decreasing the liability account, debit, because we're paying it, and we're crediting cash by spending the cash, decreasing cash $10,050. There's the posting to the ledger. Debit accounts payable, $10,050. Now the balance in the account is zero. We've incurred a debt, we've paid the debt. And then the $10,050 is credited to cash on the right-hand credit side. March 6, we now provide a service on account. We provide an invoice. We provide the service and we give them a bill. They now owe us the money. Even though cash was not received, it is still fees earned. We provided the service. This is a perfect example of accrual-based accounting. No cash has changed hands, but the service has been provided. We still record the transaction. Debit 2,700 accounts receivable, increasing the asset accounts receivable. They owe us the money. And credit fees earned $2,700. We've recorded revenue. We've provided a service. Post that to the general ledger. Accounts receivable, debit $2,700 on the left-hand side of the account, and fees earned $2,700 on the right hand, or income coming into the company on the fees earned account. March 7th, we pay rent expense for 1 month, paying cash $1,225, cheap rent. So notice the difference here. When we provide a service and receive revenue, it's credited. When we expense or a service is provided us, expense is debited. Debit rent expense $1,225, credit reducing cash $1,225. Post that to the ledger. Rent expense, debit, cash, credit, $1,225. Notice again, revenue accounts have credit balances, expense accounts have debit balances. March 8th, that receivable that we incurred on March 6th, the individual pays us $1,125 of that receivable. Doesn't pay us the full amount, just partially pays us $1,125. Debit cash, credit accounts receivable. There's that to the ledger. Debit, left-hand side of cash, accounts receivable, credit, reducing the amount owed. And then finally, on the March 9th, the owner withdraws $10,000 from the business, withdraws $10,000 cash. Notice withdrawal is not treated as an expense because it's a withdrawal by the owner of the business. Debit withdrawals $10,000, credit cash $10,000. And there's the posting to the ledger. Withdrawals $10,000, left-hand side, $10,000 credit to cash. So there's our ledger. We take the total of the left-hand side and compare it to the right-hand side. In the case of cash, the left-hand side or debits are higher by $94,850. Accounts receivable, $1,575. Supplies, $1,250. Rent expense, $1,225. Fees earned, credit, $18,200. Office equipment, debit, $10,050. Accounts payable, $0. K Spade Capital, credit, $100,750, and withdrawals, debit, $10,000. And then I put all of these balances and list them by debit or credit into the trial balance. Here's all the debits, here's all the credits, and golly, it's balanced. You now can complete the rest of your accounting entries, which are chapters 3 and 4, knowing that your ledger and the entries that you'd use to put those accounts in the ledger are balanced. And now you continue on to adjusting the accounts, closing the accounts, and completing the transactions of operating the accounting transactions of your business. So that is the question number 3, and it gives us a starting point to begin chapter 3, adjusting entries. And we talked a little bit about this last week. Notice our trial balance is not a financial statement. It is just a trial balance of the accounts and their balances. It just tells us the debits equal the credits. It doesn't tell us we made $118,950 in profits. It does not tell us anything. It's just a statement of balance. Nothing more, nothing less. Okay. Now, let's look at this. As you can see on your page, here is exercise 3-7. This is one of the first entries or first problems in chapter 3 that asks you to prepare adjusting entries based on the information of the financial statements. These are all perfect examples of every type of adjusting entry that you have. The nice thing about the textbook is it gives you some of the answers. So make sure you're doing things correctly if you look at those. It gives you some checkpoints. But this is an example of an adjusting entry, and we talked a little bit about this last week. An adjusting entry is to change the account balances before the end of the month or at the closing of the month to account for changes with the passage of time, with the receipt of services or the owe of services. We adjust the accounts. All right. Well, what we're going to do here today, or what we're going to do now, and I'd like you to follow along with me if you can, if you have the ability to do so, and Vince can stop eating for at least 1 second while I'm talking. Just teasing you, Vince. That's why you should turn off your video if you don't want me to see you eating. But I'm just teasing. I could care less. All right. So what we're going to do, or is what I'm going to do, is I'm going to create an Excel spreadsheet, and I'm going to do these adjusting entries based on what they tell us in the problem. And we're going to explain each one of these entries so you understand that, because then it will help you understand why adjustments take place. So this is what we're going to do. All right. So let me open up a spreadsheet here. Barbara, give me a thumbs up. Do you see my spreadsheet in front of you? You don't. Okay. Now do you, Barbara? Okay, thank you. All right. So here's a spreadsheet I'm going to do, and let's call it Chapter 3, Adjusting Entries. Now what I'm going to do is when we're all done tonight, I'll post this spreadsheet to Blackboard so you have it as a template, but at the same time, you can work along with me if you can, or maybe you've already done this problem, and we'll just see. Adjusting entries. We're going to have the account, a debit amount, and a credit amount. All right. And let me add a column here. Transaction A, for example. All right. So let's take a look at these transactions. Wages of $8,000 are earned by workers but not paid as of December 31st. Okay, wages were earned but are not paid. All right, so cash is not a part of this transaction. All right, cash is not a part of it. Wages are. There's it is, wage expense. There it is right there. And now it remains unpaid, so it's got to be some type of payable or liability. We owe it. There's wages payable there. See that into our accounts? So our transaction would be to wage expense would be the account, $8,000, and wages payable, credit, $8,000. We're recording wages that have been earned but remain unpaid. Wage expense debit, wage payable. This is called an accrual. A service has been provided but remains unpaid. One of the examples of adjusting entries. Wages have been incurred, expense, remain unpaid, liability. Let's look at the next one. Depreciation on the company's equipment for the year is $18,000. Now, what the hell is depreciation? All right. Well, hopefully you've read your textbook. And depreciation is the recording of expensing of an asset. I'll give you an example of that. A couple years ago, I bought a new car. All right. Went to the dealer, picked up the car, paid for it, got the everything all set up, and it was a brand new car. The odometer had 0 miles on it. I took the car out of the lot and started driving home. Got about 2 miles away from the dealer, and I thought, this is not the car I wanted. There's something wrong here. I'm going to take it back to the dealer and see if I can get another one. So I turned around and drove 2 miles back to the dealership and went to the dealer, to the person who I bought the car, and says, "Hey, dude, can I get another car? Can I exchange this for another one?" He goes, "Sure, that's okay. We understand that. You don't like your car. But you drove it 4 miles. I go, "What does that mean?" Well, because you drove it 4 miles outside of the lot, it's depreciated. It's gone down in value. So you can't get a car that's exactly the amount that you paid for this car because you just lost $300 by driving the car 4 miles. It's depreciated. It's gone down in value. Even though it was only 4 miles, I have used the asset. It is depreciated. In accounting, that's a very important concept, is to expense assets as you use them. It's called depreciation. So here in transaction B, we're depreciating equipment for 1 year, and it's depreciated $18,000. Now, later on in our chapters, I believe it's chapter 9, or 8 or 10, we learn how to calculate depreciation. Isn't that exciting? But we're going to learn how to calculate depreciation. Now, in this section, the number is just given to us. $18,000 has depreciated. And here is the transaction. Transaction B. We're going to debit depreciation expense. Expensing that $18,000 as 1 year depreciation. And the account we're going to credit is a little bit different. It's called accumulated depreciation. Accumulated depreciation on that equipment or on that asset, credit $18,000. This is one of those rare occasions where we're putting a credit into an asset account. It's called a contra asset account, accumulated depreciation. It's an asset with a credit balance. Because we already have the asset listed on the books at its cost, now we keep track of how much we depreciate that asset. It's called accumulated depreciation. This is an asset account. Depreciation expense, naturally, is an expense account. That's the recording of another type of adjusting entry, recording the use of an asset. Let me put down the reasons here. This is an accrual expense entry, and this is a expense of asset. That's what's going on there, and those two types of adjusting entries. Transaction C. The supplies account had a $240 debit balance at the beginning of the year. During the year, $5,200 of supplies are purchased, and a physical count of the supplies at December 31st shows $440 of supplies available. Oh, that's interesting. So we start out the year with $240 of office supplies or supplies. We purchase an additional $5,200 during the year. That gives us $5,440 of total available supplies. Then at the end of the year, we take a physical count. Hey, we have 440 supplies left. That means we used up the difference. An adjusting entry is to record the use of an asset by taking an inventory of how many supplies remain at the end of the year. So let me calculate that again in the arithmetic. We start off with 240. We purchase additional 5,200 during the year. That's $5,440. And at the end of the year, we show that we have $4,440 remaining. It looks like we used $5,000 of supplies during the course of the year. So we have to record an adjusting entry in transaction C, debiting supplies expense, $5,000, and credit, supplies, spell that right, and crediting supplies, $5,000. That's the adjusting entry, again, to record the expense of an asset. What's the asset? Supplies. How do we calculate that? Well, we start off with 240. We add in what should we add in? 5,200. We add in 5,200. And then we're left with 440. $5,000. We start with 240. We add in 5,200. We end with 440. That should be the ending balance of the account. It must mean we used $5,000 of supplies. Transaction C is the recording of the expense of the asset supplies. And how did we determine that number? Inventory of the supplies at the end of the year. We have a chat question. Don't know what Vince means, but I see it now, but no worries. That's okay. All right.
Professor Hasse?
Yes.
It's Marianne. Isn't that second line supposed to, instead of being double supplies expense, the second one's just supplies? It looks like it auto inserted.
Yeah, thank you. Thank you, Marianne. Thank you. Thank you. Thank you. Thank you. Supplies. Very good. Thank you for that catch. Appreciate it. All right. Again, the adjusting of an expense because we used it over the time period. Transaction D. The prepaid insurance account had a $4,000 balance at the beginning of the year. Remember we talked about prepaid last week. Prepaid is paying in advance for something before the service is provided. Paying in advance for insurance. Paying in advance for rent. Before you use up that insurance, it's an asset. As that asset is used up, it becomes an expense. The prepaid insurance account had a $4,000 balance at the beginning of the year. An analysis of insurance policies showed that $1,200 of unexpired insurance benefits remain on December 31. Looks like we used $2,800 of insurance. Started out with 4, we're left with $1,200. The difference is $2,800 for transaction D. Debit insurance expense, $2,800. Credit prepaid insurance, $2,800. Lowering the prepaid by $2,100 as a credit brings it to the balance of $1,200 that remains in the prepaid account that's unexpired. We're expensing $2,800. Again, this is the expense of an asset that we've prepaid in advance, and now we expense it as that insurance has expired during that year. An adjusting entry prepaid. People do this for a living, trust me, and they get paid very well for it. Kind of creepy, isn't it? All right, transaction E. The company has earned but not recorded $1,050 of interest revenue for the year ended December 31st. The interest payment will be received 10 days after the year end, January 10th. So if we're closing our books on December 31st, we have to record this $1,050 of interest revenue. Again, this is called an accrual entry, accrued revenue. Revenue has been earned, but not remains unpaid. When is it going to be paid? Next year, January 10th. So transaction E. Transaction E. Interest receivable. $1,050. Debit. Interest revenue. $1,050 credit. We received or earned the interest, but it won't be paid until the new year, January 10th. As of December 31st, it is a receivable. The money is owed us. This is called accrued revenue. Another example of an adjusting entry. The recording of revenue earned, in this case interest, and it remains unpaid. It won't be paid until the next fiscal year. Transaction F, the last one. The company has a bank loan and has incurred but not recorded interest expense of $2,500 for the year ended December 31st. The company will pay interest 5 days after the year end on January 5. Well, this is exactly like we did in transaction E, but it's flipped. In this case, it's not revenue, it's expense that we owe, and we're going to pay it in the new year. So transaction F interest expense, we've incurred it, $2,500. And interest payable, $2,500 credit. This again is an example of an accrued expense. Make this up here, accrued expense as well. Okay, the recording of interest we have incurred, but we're not going to pay it into the next year. Let's save that. This is a perfect example of Chapter 3 and examples of adjusting journal entries. the adjusting for an expense that's been incurred but unpaid, the expense of an asset over time depreciation, the expense of using up supplies, the expense of recording a use of a prepaid, the accrued of revenue, and the accrued of expense. You can designate these as the key adjusting entries for a company. Study these, you'll be in good shape. The only one we're missing here that's not in this problem is the transaction or the adjustment of unearned revenue to earned revenue. And we'll look at a problem later that has that specific example. So this is chapter 3. All that mumbo jumbo of things going in and back and forth in the reading, this is what it resorts to. Examples of adjusting entries. So once you do these adjusting entries, then you again have to post them to the general ledger, to those same ledger accounts, adjust those ledger accounts, and come up with an adjusted trial balance. And now you've completely adjusted the books with these adjustments, and now we'll have a new trial balance. We'll look at we'll look at a problem after break where we do this process, okay? But exercise 7 is a perfect template to explain the examples of what an adjusting journal entry is. Now I'm going to stop right here and we're going to take a little break in just a minute, but I want to make sure that as we now have progressed, this is week 3, we've gone from understanding the accounting equation, assets equals liabilities plus equity, and now we have taken those accounting equation and put it into the accounting language. In the quiz that we just did, quiz 1, the accounting language was to put those transactions into journal entries and then summarizing those journal entries in a general ledger and then summarizing that general ledger into a trial balance. And now in chapter 3, we take those accounts. These are a little bit different accounts, but still we take the accounts and we adjust them for events that have occurred that we have to adjust for before the end of our accounting period. In this case, December 31. Once we do that, we post them to a ledger and we prepare another trial balance, making sure we're still equal, debits equal to credits. And from that point on, now we go into the closing process of our year end, where with that adjusted trial balance, we can do the financial statements. With that adjusted trial balance, we can now close the books and get them ready for the next accounting period starting off. And that's what chapter 4 is all about. When we come back from break, we're going to look at a problem. And let me bring that problem up in case any of you want to sneak ahead. We're going to take a look at a problem. I'm going to get you seasick here, excuse me. Here we go. We're going to do the adjusting entries. This is problem 3-2A in your textbook. We're going to take a look at and do the adjusting entries. And we're going to prepare those adjusting entries. Then we're going to take a look at problem 3-5A, where I give you the adjusted trial balance already completed. All the adjustments are done, and then we're going to take that adjusted trial balance and prepare the financial statements. The income statement, statement of owner's equity, and the balance sheet as of December 31st. So problem 3-2, we're going to do another set of adjusting entries. And then in 3-5, we're going to take adjustments, the adjusted trial balance, and take those numbers and transfer them into legitimate real-world financial statements. Problem 3-2 and 3-5A when we come back from break. All right? And we'll do those to complete our discussion of chapter 3. All right, So let's take a break. Why don't you come back a little bit after the 7 o'clock hour? Take about 10 minutes, stretch, take a glass of water. Vince, you don't need anything more to eat. You've already eaten enough for tonight. And we'll come back a little bit after 7 o'clock. See you then. Thanks. Vince, can you see the Blackboard screen on your computer? Thank you. Okay, we're back. Make sure everybody's back. See, I can't see everybody, so if you're not back, that's a problem, but I can't tell. So we'll begin. The first thing I want to start before we get back to chapter 3 is in the class discussion forum in your Blackboard. Here's the front screen of your Blackboard. By the way, you'll see some more grades be put into your report card setting tomorrow or Wednesday. Your quiz number 2 grade or quiz number 1 grade, you'll see it right there in your report card. But I'd like to show you in the class discussion forum that's there. You have some student interviews coming up this Thursday. And see, as you can see, Tori and Marianne have already signed up for the appointments. Looks like I have 2 others have signed up, Kathleen and Vince. Very nice. So in other words, we have signed up for our interviews on Thursday night. So you'll just click on the WebEx link to office hours for Thursday, and you'll come on and talk to me for a couple of minutes about the course. So everybody make sure you sign up for a time for Thursday that's going to be allocated between 7 and 9 o'clock Thursday. If you cannot do Thursday, just post it to the discussion forum and we'll pick out another time, either Friday or the weekend, to talk to me. And this is an important thing because it's one-on-one. I get to make sure you're not freaking out or everything is going fine or you're having computer issues and and you're afraid to tell me or whatever. This is a good time for me to check in with you all on an individual basis, not as a group, and just talk about the course and let you know what we're going to be doing and how we're going to do it. Because I know this has not been an easy couple of weeks for any of you for a variety of reasons, naturally with the virus and that sort of thing and changing our work styles and what's going on, but also all of a sudden being told that your class, which was going to be on the Burbank campus, is now all of a sudden on the online. And that can be a little unsettling, especially if we're not used to this stuff. So I want to talk about that on Thursday. Make sure you're comfortable. Make sure you're not having any issues to make sure we get those worked out and so we can move forward in our class. So make sure if you have not signed up for a time for Thursday to talk to me, you do so either today or tonight after class or tomorrow. And so I can look forward to speaking with you all on Thursday. Also, here's another topic that's important. Even though this is an accounting class, we are going to do a project paper. And here's the information on the project paper. It's a paper that you're going to take the 10K filing of a company that you're going to pick, and it can be any company within the Fortune 500. Here's a link to the Fortune 500 listing. It's basically every major company in America. It might be a company that you work for now, or a company that you might own stock in, a company that you might want to be interested in knowing how that company works. You pick that company and you post it to this forum and create a thread and tell me what company you have selected. And you need to do this by Sunday, April 19th. So that's basically in 2 weeks. Tell me the name of your project. And this is the explanation. Here's a project overview of what the project's all about. And here, if you click on this file, here's the project overview right in front of you. This is due May 25th, and you are to select a company. And then I'm going to ask you all these series of questions. And you're going to go into the Form 10K, and you're going to answer each one of these questions in your paper. Now, I know this sounds a little bit mundane, but also it gives you the opportunity for the very first time, probably, to see the financial statements of a company, of a real world company, and what they can tell you about that company. By answering these questions and putting the answers in a paper, and next week I'll have a sample paper for you so you can see how that looks. And I want you to do that because it applies what we're learning in this class, accounting events, accounting transactions, financial statements, it applies that to the real world. And I think you'll get something out of that. Also, many of you are still going to take a finance class in your program, Business 330. Many of you are going to be taking other classes. This helps you understand the makeup of those other classes, why companies are in business, how they market, how they raise capital, how they raise money. So this is a good project to do. It represents 15% of your grade. All you have to do is answer the questions and you get an A and put it in a decent format that I can read it. So we'll talk more about this next week, but you need to select you need to select the paper topic by April 19th, your company. Here's a search of Fortune 500 if you need help, and post it to this discussion forum and tell me the name of the company that you would like to use for this paper. So that's another thing you have to do over the next 2 weeks is select a company for your paper. If you say to me, Mr. Hassey, I have no freaking clue what company I want to pick, all right? I will help you pick a company. Probably a company that you like. Geez, I drink a lot of Starbucks. I love Starbucks, even though these days I'm not drinking much Starbucks. Why not do it on Starbucks? Or geez, I work for Apple Computer. Maybe I should find out what my company's all about. Apple Computer, and so on. So that's the roundabout way of selecting a paper, to a company to work on in your paper. This is due the last day of class to Blackboard, May 25th. The paper will be posted on that day for 15% of your grade. So we have a few things to do in addition to our regular work. We have to select our project paper. And also next week, we have another quiz. And here's that quiz right here. It's due next Sunday at 9 o'clock. It's 2 questions taken from Chapter 3, Adjusting Entries, and Chapter 4, Closing Entries. Examples of those problems we're talking about tonight. And you can use those problems as your help in putting together this quiz again. Notice in quiz number 1, I already have the solutions posted, so you can see them. The grades will be posted in another day or so. And here's your work for next Sunday, quiz number 2. This leads us to our examination, our midterm examination, which will be on April 20th. And that'll be probably as of now on chapters 1 through 6. Probably 8 and 9 will not make it into that midterm. We'll probably do it on chapters 1 through 6, but stay tuned for next week for more details on that. But these all lead up. All these quizzes are your templates, are your review guides for the midterm, which will be in a couple of weeks. Okay, so that's what we got cooking as far as grade material for the next week. If I go to week 3 in our Blackboard, here's our week 3 file folder. I hope a lot of you have a chance to look at the introduction video that I post every Sunday. This gives you a nice little highlight of heading into the week, tells you, it refreshes your memory about things that we're doing. And also this week I gave a little video about the accounting periods, which drive our adjusting entries and our closing of our books. A little video was included in that. I hope you have a chance to look at that. It's usually I try to make them less than 4 or 5 minutes, just a quick little blurb so you can get prepared for the week's work. I try to get these posted by 6 o'clock on Sunday. I was a little late this week. I apologize. But take a look at those introduction videos in the week coming up. They give you a good entry into what we're going to be talking about this week. All right? Even though I can't be in front of you live and in color in Burbank, I try to get enough video material and explanations to help you feel comfortable in going forward with the class. And again, here's the accounting cycle, chapters that make up the accounting cycle and the areas that we've been studying and we'll be looking at. And again, here are the solutions to chapters, especially tonight, chapters 3 and 4. If you want to download those solutions, you can follow along with me, or you can do the problems and have those solutions as homework. Again, I don't grade these problems. I don't go over every problem, as you already know. These solutions can give you answers to the work if you so desire. Remember, I said this in the beginning first of a class. By just coming on every Monday night and sitting here for 2 or 2.5 hours and listening to me spiel the material, that ain't going to get you an A. The only way to get an A in this class is on the other nights of the week, whenever you can, according to your schedule, is to make sure you look at the review problems, you review the solutions to any existing work you've already done, and you get prepared by reading the chapters or looking at the PowerPoints for the chapters prior to the class of that next week. If you want to get an A, that's the work you have to put in. All right, that's the work you have to put in. Just showing up on Monday night, and even if this was a class, just showing up in Burbank on Monday night will not guarantee you an A. It's participating in planning and doing the work. That's how you get an A in this class. Okay, let's get back to chapter. Any questions though? We have a chat. No information there. Okay. All right. Again, I'm recording this this class. How the recording works, and I don't know if you checked it out from last week, is I post a link to WebEx. I can't download the whole file because it's huge, but I post a link to the cloud, the WebEx cloud, and that link, you click on the link and you can bring up the recording of the class. Our classes are too big as far as digital space to be put in Blackboard or YouTube, but you have a link to the WebEx cloud. You click on that link and you can watch the recording of the class. Okay. Exercise problem 3-2A. Let's take a look at this. 3-2A. I'm not going to do this problem one by one like I did in the last one, but what I'm going to do is show you the results or the solutions that are there, but also highlight a couple things about this material. One of the things that are going to drive you nuts in accounting is that the basis of all problems are the same. General journal entries, posting to the ledger, adjusting entries, adjusted trial balance, financial statements, closing entries, closing trial balance. That process is the same no matter what. If you're Apple Computer or Joe Blow Incorporated, all right, doesn't make any difference. But how the material is given to you, the reading of the transactions, the type of the way the transactions information is given to you changes. So you can't memorize business transactions. It depends on the company. It depends on the time of year. It depends on a lot of things. You have to understand or be able to get used to interpreting the data so you can put it in the different type of accounting language that we use, that we've talked about. Entries, adjustments, whatever. So that's the thing that you have to get used to is the different ways data. Look at the data in this problem is quite a bit different than exercise 3-7. So you have to get used to understanding how that is shown. And sometimes it just takes, you got to stare at it. You got to go back and try to think what these transactions are telling you and how you will record those. That's one of the key things about mastering this type of material. Okay. Here's a company that's annual accounting period ends December 31st. And the following information concerns adjustments recording on that date, December 31st. They give you the accounts you're going to be using or could use, And then they give you the various transactions. Notice this one, transaction B. This is what I mean by giving you data differently. In exercise 3-7, I just said, oh, they had a $4,000 beginning prepaid. They have $1,200 left. What's the prepaid expense adjustment? The difference, $2,800. But look at this one here for prepaid. There's 3 different policies, 3 different coverage periods, 3 different amounts. And you have to correlate all those into an adjusting entry to record insurance expense and prepaid credit for December 31st of this year, 2019, with these 3 different types of plans. That can drive you nuts. All right. That's what I mean by being able to look at data differently. So throughout this problem, we have office supplies, we have prepaid, we have salaries payable, we have depreciation, we have accruals in the form of rent earnings revenue and rent expense paying in advance. So correlate all that and it looks like this. Here's my adjusting entries based on this information from this problem taken out of our textbook, problem 3-2A. And here's what it looks like. December 31st, we start out with $4,000 of office supplies.
I'm sorry, Brett. I just can't see it.
Oh, you can't?
No, sorry about that.
All right, thanks for letting me know. Hang on. Now I bet you can see it, correct? Okay.
Yes, Professor. Thank you.
Thank you, Barbara. I can see you, so you can just give me a thumbs up. Thank you. Okay, so again, here are those transactions. December 31st, in transaction A, they tell us that we start out the year with $4,000 of office supplies. We purchase an additional $13,400, and we're left with $2,554 in inventory that we accounted at the end of the year. So that means we used $14,846,000 of office supplies. Debit office supplies expense, credit office supplies. Here's that prepaid transaction that we looked at. Remember, we have 3 policies. Okay? We have to determine how much, and this should be 2019, not 817 here. I apologize. How much of those policies are left in 2019? All right. How many of those policies are left? Policy A was for 24 months at $600 a month. There's 3 months left in 2019. Policy B, $360 a month. There's a whole year left in 2019. It should be, again, 2019. Typo by Mr. Hassey, I apologize. And policy C that started in August of 2019 at $200 a month. That's September, October, November, and December. August, September, October, November, December. That's 5 months. And so of each one of these policies has a certain amount in 2019. The total is $7,120 of insurance expense that was prepaid in advance, now has been incurred in 2019. Debit insurance expense, $7,020. Credit prepaid insurance, $7,020. Now, again, you are not going to see a problem like this in any quiz or any examination. I am not that kind of Darth Vader type of professor to drive you nuts about that. So don't worry about that. You'll just get a simple prepaid account balance usage like we did in exercise 3-7. Don't worry about a problem like this. I'd have to be a real madman to give you something like that. Okay, then we have another one. In transaction C, we have 2 days of salaries that are unpaid at the end of the year. 2 days. Each day of salary is $1,960. There's 2 days that have not been paid at the end of the year. That's called an accrued expense. So 2 days at $1,960 a day, debit salary expense, credit salaries payable, $3,920. Transaction D, we have depreciation on an asset. All right. What's the definition of depreciation? The cost of the asset, in this case, the building cost $960,000, minus the salvage value or the ending value of the investment at the end of its life, $45,000, divided by the number of years that we plan on, or the tax man tells us we will have that building. 960,000 divided minus 45,000 divided by 30 years. That's $30,500 a year depreciation. Debit depreciation expense, credit accumulated depreciation. Depreciation. Cost minus salvage divided by life is called straight line depreciation. Transaction E. Rent was earned but remains unpaid at the end of December. Debit rent receivable, credit rent earned. We have earned it, but they're not going to pay us until the next month. That's an accrued revenue. We've earned the revenue, it just remains unpaid, rent receivable. Now, here's an example of the one we were talking about in exercise 3-7 that we did not see in exercise 3-7. It's called unearned rent. Okay? Here in this case, somebody has paid us rent in advance. All right? They paid us in advance for 2 months, November and December. When that original amount was done, the original entry way back when, a couple months ago, was debit cash, $5,600, credit unearned rent. Because we haven't earned the rent yet because November and December haven't happened yet. It's called rent being paid in advance. It's kind of like prepaid. But prepaid, you're paying the expense in advance. Unearned rent, somebody's paying you in advance. All right? Unearned rent is a liability account. I owe the service. Well, now the adjustment at the end of December 31st, 2019 is, all right, the 2 months of rent, November, December, now have been earned. It's no longer unearned rent. It is now rent earned. Debit the liability, $5,600. Credit rent earned, $5,600. You have to be a real madman to come up with this system. Let me give you the history of accounting. You know, accounting was founded or developed or invented in the early 1500s in Venice, Italy. And the person who invented accounting, I guess you could say, his name was Joseph Debitino. Joseph Debitino. That's the name debit. His wife was named Elisa Creditini. Elisa, I hope you guys are buying this. Elisa Creditini. Credit. And why she was called Creditini and credit became the right-hand side of the account is because Alicia slept on the right-hand side of the bed. Giuseppe slept on the left-hand side of the bed. Giuseppe Debitini, Elizabeth Creditini. Debit, credit, the founder of accounting. Nobody's laughing. That's all right. It's Monday night. It's raining out. It's accounting. I understand. That was Mr. Hassey's version of the inventor of accounting. Giuseppe Debitini, Alicia Creditini. They were married. Debit, credit. All right, shut up. Okay, here we go. Let's get back to this. So, again, exercise 3-2 is some more examples of adjusting entries. The recording of an expense as it's used up office supplies. The recording of prepaid insurance as it is incurred. The recording of salaries earned but unpaid. The recording of an expense of an asset, a building called depreciation. The recording of earnings or revenue earned but unpaid. And the recording of revenue or revenue paid in advance now being earned. Another examples of our adjusting entries. Now, let's look at this. Here's problem 3-5A. All right, at the end of your book. I've already done all the work for you. Thank you very much. Thanks, Mr. Hassey. Appreciate the effort. All right, I've done all the work. And here's the final adjusted trial balance. $1,134,800 of debits, $1,134,800 of credits. Our job in this problem, all right, all the work is done. Now we got to tell the world what happened. What does all these accounts with all these numbers that are in balance, so as an accountant, we did our job, but what does this transfer or transpire into telling us what happened? What's going on with this company? The final step of telling the world how we did. So we take this adjusted trial balance and all the revenue and expense accounts are the income statement. The net between revenue and expense plus the capital and withdrawal accounts is the statement of owner's equity. And the net of all that plus the asset and liability accounts is the balance sheet. So our job as accountants is, okay, we're in balance, everything's cool. Now let's tell the world in a nice format what happened. And here are those results here. The income statement. Notice I said you go to that trial balance. Oops, wrong one. You go to that, here's the trial balance, and you take all the revenue and expense accounts. Fees earned, interest earned, and all these expense accounts, and they go into what is called, let me make this smaller so you can see it. There you go. They turn that into an income statement for the period of time. We had $508,000 of revenues, $420,000 of expenses. The difference between revenue and expense, hey, Chara Company made a profit of $87,200. All that is taken from our adjusted trial balance given to us in the problem. Notice there's no cash, automobiles, there's no withdrawals or capital. The income statement is just made up of earnings, revenue, and expenses. And there it is right there. Isn't that a nice, pretty little picture to tell the world, hey, we made $87,000 last year. Cool. But this is the statement that's in the 10K that you'll be looking up at your companies. This is the statement that is told to the world in investor meetings. This is the statement that's given to the IRS. This is the statement that you show your managers and your investors how you did. All the accounting stuff that you work to debits and credits and balancing and calculating and doing all that is all in the background, and it leads to this nice, pretty little picture. The income statement. And it's driven by getting the information from the trial balance. And where does this come from? Adjusting entries, journal entries, all the processes by which we have done these first couple of weeks. And this is the pretty little picture it puts together. you're going to need to be able to put this together in a quiz and a examination. All right. Note the format, the name of the company, the type of statement, and the period of time. If you don't put that in, nobody will know what the hell these numbers are for. You got to put those in. Notice the second statement. Remember I said back in our problem, all the revenue and the income and revenue and expense accounts or income statement, and the net of that plus the capital and withdrawal accounts are the statement of owner's equity. Well, here's the statement of owner's equity. Remember, we made a profit of 87.2. We start out the year with $255,800 in capital balance. That's the end of last year. Here's our profit. Here's the withdrawals from the adjusted trial balance, 46,000, and there's our capital balance at the end of the year. The company, what the statement is, the time period. So at the end of December, this company made a profit and they had a total capital position of the ownership of $297,000. Beginning balance, net income minus withdrawals. Now notice where this 297,000 goes to. The balance sheet. The balance sheet. There it is right there. The equity position is 297. The details are here. How that got there? The income statement here. All right. Notice from our adjusted trial balance, now we include all the asset accounts, the liability accounts. There they are right there. These all go forward to the balance sheet here. Assets, cash, receivable, interest, note, supplies, and notice the automobiles. The 168,000 is the balance in the automobile account. The balance in the accumulated depreciation account is a credit balance of 50,000. This is what we paid for the automobiles. This is what's been depreciated. There's the net balance. This is what we paid for the equipment. This is what we've depreciated, the balance. And then the land. $600,000 of things that we own and how much their value is at cost, not market. And then the debt that we have, accounts payable, interest payable, salaries payable, unearned fees. Remember unearned fees? It's the amount of money that's been paid to us in advance that we have yet to earn. And long-term notes payable, $303,000 of debt. $600,000 of these assets, 303,000 of that 600,000 is borrowed money. And then finally, the owner's position of 297,000. Assets equals liabilities plus equity. We're in balance. The balance sheet. Notice the balance sheet totals 600,000. Notice our adjusted trial balance was $1,134,000. Not even close, because the adjusted trial balance is made up of all these accounts in our system, and they're broken down in their particular financial statements to tell us what we earned, what we expensed, what was our profit, what the owner's position is, what we own, what we owe, the owner's position. There we go. Now we've told the world exactly what's happening in our business. This is the end result of all the accounting transactions. This is an excellent problem. It's in your Blackboard, problem 3.5a. It gives the examples of financial statements and how we should do them, taken from the adjusted trial balance. Very good problem to have in your notes for future reference. Excuse me. Okay. That's chapter 3. Fini. A biento. Au revoir. Get the hell out. It's over. All right. Chapter 3. We've adjusted the books. We've done an adjusted trial balance. And now we've told the world what happened. Excellent. There's one more thing to do. There's one more thing to do. And that's chapter 4. What's that thing to do? I'll go back to this problem 3.5a. Here's our adjusted trial balance. Everything has been done. We've recorded every event for this period of time. We've adjusted them. We've made everything equal. Everything's in balance. We're fini. But now this is for the end of December. What happens on January 1? Does our business end on December 31st? No. Our business continues on into the new fiscal year that begins January 1st. So we want to begin our January 1st with a clean slate of books to tell us what happened in January of the new year and the whole new year. So we have to do what chapter 4 is about, the closing entries. The closing entries. We have to close the books. Now, what does that mean? We close all the temporary accounts. What is a temporary account? Here we go. A temporary account is withdrawals. A temporary account is any revenue accounts. In this case, fees earned and interest earned. What's a temporary account? All expense accounts. So from withdrawals to expenses, those accounts have to be closed. They have to be closed. We cannot close cash. If we close out cash account, that's saying we spent all our cash. I don't think so. I don't think we want to close out the receivable account because those people owe us money. And the same with payables. We owe $96,000. We can't just say, oh, we don't owe the money, let's close the account. So all asset and liability and capital accounts carry forward into the new year. You don't have to touch them. They just roll over. But all the temporary accounts from withdrawals to expense have to be zero. Have to be zero. That's called a closing entry. And we're going to take this adjusted trial balance from chapter 3 and show you what a closing entry is. And this is what's talked about in chapter 4. Closing entries are setting up the books for the next fiscal year. And I know it might say, Jesus, Mr. Hassey, do we have to do more of this? Yes, because you have to show your books in the next year. What are your withdrawals in 2019 and 2020? What are your withdrawals or what are your earnings or revenue in 2020? What are your expenses in 2020? That's why you zero out these accounts, because they only last 1 year. The capital account, the liability accounts, and the asset accounts continue on as long as the company is doing business. But the revenue, expense, and withdrawal accounts have to be closed every year. For example, today is April 6th. I know for a fact today the controller of the University of Laverne pressed a button on her accounting records and closed the books for March 31st. They got all the adjusting entries in, everything was accounted for, the trial balance was equal, and today they closed the books. What did they mean by that? They closed out all the revenue and expense accounts and rolled them over to start April with zero balances so they can see what their revenue and expenses are in April. Every company in the world probably did that today or a couple days ago. Closed March, opened April. Yeah, I know what time it is. Closed March and opened April. So let me give you an example of what if I was asked you to do the closing entries for this problem in exercise 3.5a, what would be the closing entries? So let's go to my little spreadsheet. Chapter 4. Now, make sure. Vince, do you see the spreadsheet? Thank you, sir. So let's call this Chapter 4, Closing Entries. And you tell it's late in the day. This is my third class today, and I'm getting a little punchy, so I apologize. Closing entries. All right, we have our account. What account we're closing? Is it debited or credited? And now we're going to do closing entries. And what's the subject here? Close all temporary accounts for the new accounting period. That's what we're doing. Closing all the temporary accounts for the new accounting period. Now, again, remember, I'm saving this file and posting it to Blackboard in our class notes for tonight. And you can use this template in looking at your quiz for this next week. It'll prove very valuable to you. So let's go back to our problem. And
Professor
let's do our, yes, sir. Yes.
Quick question. Did you say that that was like it's an annual thing just for starting the new fiscal year, or is this something that's done like monthly or quarterly as
To
well?
be perfectly honest with you, it's done both. Most companies close the book every month, and then they keep a second set of books that go over the whole year. And then on December 31st, they closed a whole lot of them. But most companies close every month. Does that make sense? Yep. Okay. Yeah, that can be a little confusing. Checking for chats. We're okay. Okay. So let's go back to this problem. So let's first of all close the revenue accounts. Notice the fees earned and the interest earned have credit balances. All right. So to close those accounts, we have to debit them. But the big mystery is, what do we credit to close those accounts? And there's an account that we use called income summary. Income summary is a temporary account. It's an account by which we close the revenue and expense to and then net them out to capital. And I'll show you that process. So let's close out these accounts. First of all, closing entry, account fees earned. We're going to debit that account. $484,000. Now that account is closed. It had a credit balance. Now we're debiting it. Next account, interest earned, $24,000 credit. Account, interest earned, $24,000. So now we have closed out the two revenue accounts. And where do we close them to? An account called income summary. Income summary summarizes the total revenue, and we add those two together. $508,000 credit income summary. Oops. $508,000 income summary. So let's say I'm going to, over here to the side, I'm going to put in the income summary account, the general ledger for the income summary. This is the debit side. This is the credit side. So now I'm going to put in a credit here of $508,000 as a post to the income summary general ledger. And now I'll go ahead and post the revenue to here, and I'll close out those accounts. So now the revenue accounts are closed, and they're now sitting into the what is account called the income summary. Go back to our problem. Let's go ahead and close all the expense accounts. All right, let's close all those. All right. Depreciation expense auto. All right, that had a debit balance. So to close it, we have to credit it, $26,000. Okay. The next one, depreciation expense equipment, debit $18,000. Depreciation expense equipment. Okay. Credit that. $18,000. So we're just closing out the expense accounts. Next one, salaries expense, $188,000. Salary expense. Credit $188,000. Close this out again. What's the next one? Wage expense, $40,000. $40,000. That's now closed. The next one, interest expense, $32,000. Credit, $32,000. Notice this direct opposite of the revenue closings. Next one, office supplies expense, $34,000. $34,000. That's closed. Almost done. Next one, advertising expense, $58,000. Advertising. $58,000. That's closed. Last but not least, repair expense automobile, $24,800. Repairs expense auto, $24,800. So now we've credited all the expense accounts and zeroed them out. And now we're going to take the total of these, your total expenses, and close them out to income summary. Total expenses, you can get that also from the income statement. Total that up, $420,800. We have just closed out the expense accounts. And here's the income summary sitting here. Post that $420,800. That's a debit sitting in the income summary account. So now we know the net income, because what's the net income? It's the difference between these two numbers sitting in the income summary account. What's the difference? 508,000 minus 420,800. That's the balance in the account. Just like we had on the income statement, $87,200. So now we close that out by debiting income summary. Account balance, $87,200, and crediting our Chiara capital, increasing the capital balance by our profits. So we credit Chiara capital for the profits, the net income, 87,000, and are there equity increases by $87,200? We post that to the income summary, and now the income summary account is zero, and we can now start our year with the revenue and expense accounts zero. The net effect of them all ends up in the capital account, just like it did in our capital statement of owner's equity section. And then the last entry is to close the withdrawal account. Here it is right here, $46,000 debit. That's another temporary account that we got to close. So we got to close that account out, and that's our final entry of that fiscal or accounting period. Our Chiara withdrawals. We have to credit that $46,000. Okay? Because why? That's the balance in the withdrawal account on the debit side, $46,000. We now close it, And where do you think we put the debit? Our Chiara capital. $46,000. And now capital account is now going to match the equity statement. We've increased the capital account by our net income. Highlight that. And we've decreased the capital account by what the owner took out of the business. And we, as accountants, have now completed the accounting cycle. We have now taken the final adjusted trial balance, prepared our financial statements, and now have closed the books and now set them up for the next year by all the revenue, expense, withdrawal accounts all closed to the capital account, revenue and expense through the income summary, withdrawals closed directly to capital, and our books are closed. And now we do the rules? What does that mean? Our books are closed now, and now we can begin the whole process over again, God save us, in the next accounting period, the next month, the next year. The books are closed. This, ladies and gentlemen, is what is chapter 4 is about. The closing of the books. That's the final part of the accounting cycle. I'm going to save this. Boy, is this huge to study. You just fire up this spreadsheet here of in-class notes. Chapter 3, examples of adjusting entries. Chapter 4, examples of closing entries. You're golden. The last thing you have to do, and we'll look at a problem like that in just a minute, is now you have to prepare one last trial balance with only the accounts that remain in your accounting system that roll over into the next accounting period, and that's called a post-closing trial balance. And now you're done. All right. Let me take a sip of water. All right. There we are. Okay. Now we're going to take a 5-minute break. And when we come back from our 5-minute break, we're going to take a look at chat problem 4. Let's see. Where am I going? Let me get my notes here before I tell you something that's incorrect. Beg your pardon. Hang on. Problem 4-4 on page 156, where I give you the adjusted trial balance and you're asked to prepare the financial statements and then do the necessary closing entries for that company. 4-4A. When we come back from break, we'll take a 5-minute break. We'll look at problem 4-4A on page 156. We'll be done by 8:30, folks, okay? Everybody know that? 8:30. We're done. Barbara looks like she's ready for bed or a cocktail or both. Vince is getting hungry again, so he needs something to eat. Marianne, I don't know what's going on there, but I don't want to know about it. And so we're all okay. So we've got about another half hour left. We're going to look at problem 4-4A, and then we're going to look very quickly at 4-1A. So when we come back from break, we're going to do the closing entries for 4-4A. All right, see you in about 5-6 minutes. Adios. Okay, we're back. We are doing closing entries, chapter 4. Problem I've selected is on page 156 of your textbook, problem 4-4A. And kind of like the last one we did out of chapter 3, here's the adjusted trial balance of a company. Notice all their accounts, assets, liabilities, capital, withdrawals, revenues. Look at all the revenue accounts: professional fees, rent, dividends, and interest. All the expense accounts. The trial balance is 411,900 in balance. Now let's close the books. Prepare the closing entries for this company. All right. What are the closing? You have a problem just like this on your quiz this week. All right. Let's close the books. Remember, when we do the closing entries, we close out withdrawals, revenue, and expense accounts. No more, no less. And we close them out to the income summary account. So here's the solutions to that. All right. Here are the solutions. First of all, there's the financial statements. All right. There's the financial statements. Oops. Shoot. Got to cut off here. All right. So notice the income statement. They made a profit of $4,300. Taking all those accounts, $4,300. So if we were to do the closing entries for this, we would credit fees earned, rent earned, dividends earned, interest earned, and debit income summary 115.1. To do the closing entries, we would credit depreciation expense, building, equipment, wage expense, interest expense, insurance expense, rent, and so on. We would credit those expense accounts and debit income summary $110,800. And the profit would go as a debit to income summary $4,300 and credit capital. That's the closing entry. It's that simple. The withdrawal account would be credited $13,000 and you would debit the capital account $13,000 to close out the withdrawal account. Where am I getting all these? From right here. Here's the withdrawal account of $13,000, revenue accounts, expense accounts. Here they are in the financial statements. The closing entries would be to close out all these accounts. The net effect would be a capital balance of $117,700 in your closing trial balance, because you've closed out all the revenue and expense accounts, closed out the withdrawals to capital. It's that simple. All right. Now, let me show you something that will be not so much a help to you for the quiz, but it'll be a very big help for you for the exam that you're going to have in a couple weeks. And that is problem 4-1. Let's bring that up. If your life is really boring these days and you've walked the dog and you don't have any kids and you've walked the dog and you don't have anything else to do except watch stupid television shows or stupid stream a show, 4-1A is the ticket for you. If you don't have anything else to do this week, try doing this. But I advised against it. You might want to do segments of it. Well, I don't know. because it's a big problem. This problem 4.1a is the entire accounting cycle. Everything we've done in chapters 2, 3, and 4. It's the whole kit and caboodle. The answers are in your blackboard, but you record the original entries. Here's your chart of accounts to use. You record adjusting entries. You record an adjusted trial balance. You close the books and prepare a closing trial balance of what is left. It's the whole cycle. All right? It's the whole cycle. If you want to do it, fine, but it's an awful lot. But it gives you good practice on how to do this whole system of journals, adjustments, closing. And it looks like this. Here it is right here. Here are the entries for April. Here's the unadjusted, here's the first trial balance, 58,000. Here are the adjusting entries, examples of what we've seen already. Here's the adjusted trial balance, 60,670. Then we prepare the financial statements off that adjusted trial balance, income statement, owner's equity, and balance sheet. Notice all in balance. And then we prepare the journal entries, closing out the revenue account to income summary, closing out the expenses to income summary, closing out the net income out of income summary to capital, and closing the withdrawal accounts, and then closing the last statement, the post-closing trial balance, with all the revenue, expense, and withdrawal accounts zero. Here are the balances of the accounts that carry forward into the next accounting cycle. That is every chapter 2, 3, and 4 in one problem, 4-1A. You can try to do that. You're going to do that on the examination in a couple weeks. We've done it in the first 2 quizzes. We just split it up. In quiz 2 this week that you're going to be doing for next Sunday, you're going to be doing adjusting entries, adjusted trial balance, financial statement, closing entries. So you're going to be practicing that. This problem 4.1a is a good example in all one problem as a template to look at that, to study, plus our other problems that we've done tonight. All right. Now, there's something I'm going to show you that you do. This is good news. Barbara, you like this. This is good news. You do not have to worry about this. If any of you were reading in your chapter, in chapter 4, about the concept of this. Bear with me. Yeah, look at this baby. It's called a worksheet. All right. This is a worksheet. You put all these activities on one piece of paper and keep track of everything. Here's your unadjusted trial balance. Here's your adjusting entries. Here's your adjusted trial balance. And those accounts go over to the balance sheet column. And these accounts go over to the income statement account column. And the difference between those two must be your net income. And there it is right there. You do not have to be responsible for the worksheet. The worksheet is used for 2 reasons. To make you become an alcoholic. And number 2, to condense all these activities on one sheet of paper. But I have found in the past that the worksheet does drive students to drink a little bit more. And 2, it's a statement that tends to confuse more people than it helps. So let's just do the way we've done the problems tonight, that nice 1-step, 2-step process. Let's not worry about the worksheet. Now, some professors will say, Professor Hasse, you're full of beans. Have the students work on the worksheet so they can see them all on one piece of paper. Well, I know in the real world, the worksheet is never used because of computerization. So why do I want to subject my students to this additional work when they have enough work to worry about, like in problems 4.1 and 4.1.4? So let's just leave it at that. If any of you ran into this concept of the worksheet in your reading and you said, oh my God, do I have to know this? And my answer is, oh my God, you do not have to be aware of the worksheet. So don't worry about it. Just worry about closing entries, financial statements, post-closing trial balance. All right? Ladies and gentlemen, I'd like to point out that we now have completed the accounting cycle. All right? Now let me just summarize this. Yes, that's you guys deserve a pat on the back. I'll tell you that right now. We have now closed out the accounting cycle. Now what does that mean? Let me show you. In our file folder in week 3 in Blackboard, here it is right here, we've now completed the recording of journal entries in Chapter 2, posting to the general ledger in Chapter 2. You've done that in your quiz this week. Recording a trial balance, adjusting entries, Chapter 3, adjusted trial balance, Chapter 3, financial statements, and now we've closed the entries, or do the closing entries to income summary in Chapter 4, and we prepare a final closing trial balance to complete the accounting cycle. This is financial accounting at its bare bones. The recording of a variety of different business events, summarizing them by journal entries and transactions, and putting them into a final statement of financial statements to tell us what happened, and then at the same time getting the books set up to begin it all over again in the next accounting period. This is quiz number 1. You've done half of this. Quiz number 2, you're doing the second half of this. Exam number 1 in a couple of weeks, you'll be doing this as well. So that's the accounting cycle. From here, we go to different forms of the accounting cycle. Next week, we're going to talk about chapters 5 and 6. What are those about? Excuse me. Yeah, chapter 5 and 6. We're going to talk about retail accounting. How does Costco do it? How does Walmart do it? What's different from retail accounting to the accounting that we just saw? The main difference is inventory, keeping track of inventory. That's our next step. But everything else is exactly the same as as far as the process is concerned. Journal entries, ledger, trial balance, adjustments, trial balance, financials, closing, post-closing trial balance. It's the same for all of them. This will be with us throughout the course. We'll just learn different forms of accounting, retail accounting, manufacturing accounting, and so on. So this is a key part of the class to move forward into other areas of accounting and also other areas of the classes you're going to be taking in the future. So we're going to practice it this week in quiz number 2, which is right here in Blackboard, right there. You'll download that and do that work in a spreadsheet, everybody. You're going to post all these answers in a spreadsheet. If you have a difficult time doing that, please get in contact with me. Talk with me on Thursday. All right? But I want you to do this on a spreadsheet because that's what you need to do this on in the real world. All right? Quiz number 2, due for Sunday. The next thing you have to do before Sunday is post a time in the, oh, it looks like everybody has done that. Post a time for interviews on Thursday. And then after you get quiz number 2 done, you can worry about in 2 weeks putting together and selecting your project paper, which is posted in the project paper file folder in Blackboard. There you go. I gotta have a sip of water. I'm losing my voice. You guys are probably losing your brain cells. I don't blame you. But that is the accounting cycle. We reviewed the problems. You're going to be working on that on your own in the quiz. use the examples from our discussion tonight to help you if you get stuck. But I have a feeling you're going to do pretty good on it. I think you guys are a good bunch. Just briefly looking at your quiz 1 numbers, pretty good. So we'll be able to handle this. And I'll see you all on Thursday. But before we go, let me make sure, hang on. Let me make sure you all have any questions or concerns before you leave. Anybody with a question? Yes, Barbara.
It's not a question. It's just I have another class on Thursday, so I did post it on the forum to reschedule for another day.
Okay, we'll reschedule and I'll respond to you and give you some other dates and times to do that, Barbara.
Okay, thank you.
What class do you have Thursday night?
Marketing?
Who teaches that?
How?
Hal Assell.
Yes.
All right, Barbara, when you're on class on Thursday night, I want you to specifically say, Professor Assell, can I say something? I have Mr. Hassey in accounting this term. Mr. Assell is a very close friend of mine, and he's a good man. So just tell him I said hello and tell him you have Mr. Hassey in accounting, and he'll probably say, good God, he's terrible. But besides that, make sure you tell Mr. Assell. He and I are old golfing partners. So say hi to him. Vince, do you have Hal Assell on Thursday? No, okay. So Barbara, just tell him I said hi. So, and also we'll set a different time, even though I wouldn't have any qualms about you cutting away from Professor Assell's class to talk to me, but we can't do that. That's not right. So we'll set another time. Marianne, any questions or concerns? Looks like your mic's off.
I'm good. Thank you so much.
All right. Tori, any questions? Vince, you look okay. Vince, you're all right? That a boy. And Barbara, you're okay. So we're okay. So again, I'll see you all except for Barbara, hopefully on Thursday, and we can talk about any questions you may have about the material at that time too, okay? If there's nothing else, I want you all to be safe and sound. And can I tell you something? This is the toughest part of the class we just finished, all right? So if you feel pretty good about this, you're in good shape. Trust me. This is the most difficult part of the class through chapter 4. So I'll see you all on Thursday. Adios, everybody. Take care and thank you. See you then.